This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is sliding back just over 1% over the past 24 hours, now at $37,692. It's a red kind of day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Let's take a look at some of our top headlines. The U.S. Federal Reserve is hosting a two-day closed-door meeting and is likely to contain few surprises since Fed Chair Jerome Powell has already tipped off that a 50 basis point rate hike will likely happen in May. But crypto traders and counterparts in traditional markets will be watching closely for clues on the central bank's future plans, with some economists now worried about the prospect of a recession at a time when consumer prices are already rising at their fastest pace in 4 decades.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
It has become a rare occurrence these days, but BTC is going its own way, dropping as stocks rise. Bitcoin's put-call skews, or implied volatility of calls minus puts, continue to hover above zero, indicating stronger demand for puts or bearish bets. Dexterity Capital's Michael Safai telling CoinDesk they are seeing consistent buying on late 2022, early 2023 options, which tells us that investors are feeling a little gloomy now, but hopeful for later in the year, adding that perhaps the expectation is by then the results of the Fed's rate experiment will be clear and macro sentiment will improve. Safai saying that the upside momentum for Bitcoin will need to come more from stock performance. The stock market's near-term prospects look bleak, as expected tightening by the Fed is likely to cause demand destruction. Trade the Chain Nick Mancini saying traders looking for clues on whether Bitcoin will bounce to $40,000 or drop to $37,000 near term should keep a close eye on Bitcoin's 4-hour chart relative strength index. There you see it. Since mid-April, this indicator has been hovering beneath the current trend. It is currently testing the trend, but has yet to make up its mind. If the RSI is rejected again, along with the sentiment, Mancini expects the price to drop to $37,000. If the RSI breaks above the trend, then we would likely see $40,000 tested. All right, joining us now to discuss BTC price and more is Marketgauge Group Managing Director Michele Schneider in New Mexico. Hi, Michele. Always a pleasure.
Hi, Christine.
So we do see that there's a bit of a decoupling with the stock markets. They're rising, Bitcoin's going down. I wonder what your outlook in the short term for BTC is.
Well, I'd really like to see it hold 37,000. Otherwise, I think we probably could see a trip to 33,000. So watching very carefully here, it might be the first time, Christine, in a really long time that my own crypto wallet is relatively flat, having gotten out of things last week when it was clear that 40,000 was going to be a real barricade for Bitcoin, but always watching other stuff. And another interesting thing to say about Bitcoin is that if you look at it from the macro perspective, its ratio to Ethereum is outperforming, and considering both of them make up 70% of the whole crypto market, even with Bitcoin going down, we may see a relative outperformance of Ethereum. And if it can hold here, then Ethereum might actually turn out to be the better buy. So we really have close eyes on both.
So if you're seeing Bitcoin head a leg lower, are you shorting things? Are you on a shorting spree?
I would hesitate to short because, well, one interesting thing that could happen today, by the way, is MicroStrategy is reporting after the close, and it's sitting right in the middle of a range. So 300 would be about support, 400 resistance. It's trading at 348. And I think that kind of sums up like what would be my risk reward for going short. If I'm looking for a $4,000 move, but I would have to risk maybe, I don't know, 1,000 or 2,000, that's one thing. But I feel like that level of volatility, particularly after the Fed coming up, would be, for me, a little bit scary. I'd rather wait for the dip.
Speaking of the Fed, we're likely going to see a 50 basis point rate hike. Is that already baked in, or what are you watching for during the two-day meeting?
Well, definitely, I believe that it's baked in if it's 50 basis points. Could they surprise with 75 basis points? Yeah, sure, they can. Will they? Probably not. It would be smart of them to do that, but, they don't want to spook the markets too much, and we're still so vulnerable. But I think really what happens from here on in is more important. It's not so much about this meeting. It's going to be what they say about what they want to do going forward, what happens with inflation, what they feel about inflation. There are still a lot of people out there who think that it's transitory and it's peaking. I am not one of those people. So I would say that we're still going to see the actual equity markets relatively under pressure, except in a trading range, with commodities starting to actually outperform even more than they already have.
All right, Michele, thank you so much for your analysis. Appreciate your insights. That was Marketgauge Group Managing Director Michele Schneider. Coming up, my next guest will dive into mining and how it can make a lucrative side hustle. Welcome back. One of the world's largest publicly traded Bitcoin miners, Marathon Digital, is set to report its first quarter earnings Wednesday, which will be followed by its first ever earnings conference call. According to Wall Street Analysis, the mining company will focus on housing and deploying more than 70,000 new mining rigs and how it'll aid source capital for growth. Meanwhile, Riot Blockchain, one of the world's largest publicly traded Bitcoin miners, also raising about $10 million in April with the sale of 250 Bitcoins as it charges ahead with large-scale expansion plans. It's the second consecutive month of Bitcoin sales for the confirmed Bitcoin holder, as the company in March sold 200 Bitcoins for over $9 million. Finally, our next guest mines Bitcoin as a lucrative side hustle using Compass Mining, which hosts supplies and operates mining rigs for retail miners who don't want to deal with the hassle of doing all the work themselves. Joining us now to discuss is Taing, founder and CEO of Touzi Capital. Hi there, Ang. Thanks for joining us.
Hi, Christine. Thanks for having me.
So you have a really fascinating story. You're the son of refugees who escaped the Khmer Rouge in Cambodia. You played poker, used day trading to pay your way through college, and now you run a private equity firm with $250 million in assets under management. You're a real estate investor, and now you make over $100,000 per month mining Bitcoin. So you're a hustler.
It's in my blood. It's in my nature. I was born in a refugee camp in Thailand, in Cambodian Chinese, and I came here when I was 3. So we've always been sort of trying to find, as a family, sort of financial security. And financial security for us has been finding cash flow. And I love finding investments that cash flow, including real estate and Bitcoin mining.
So what's interesting is that you're using Compass Mining. They were on the show earlier in the year when they launched this service for retail miners, and it's done well for you. So obviously, walk us through how that works.
So the way that Bitcoin mining works is essentially you buy these very expensive computers, and then you try to get as cheap as power as possible. And then you have somebody trying to make sure that it's on as much as possible. And the way that it worked with Compass is that they take care of a lot of that. If you buy more, you get better pricing, and you can get really great economies of scale. I got in last year when pricing was pretty good and mining was pretty good, especially when China left. All of us were kind of making a lot of Bitcoin. It's more challenging now, of course, but essentially it's kind of a turnkey solution that I find it very easy for those who without much time or technical ability.
So how do you deal with the ups and downs of retail mining? What about the costs of doing business? And mining difficulty right now is really high. So does that cut into profits?
Yes, it does. And difficulty is all-time high. I see my Bitcoin earnings half of what it was last year. My fixed energy contracts and price isn't cut in half. So my profit margins is less. My profit margins last year was around 80%. Now it's around 60%. So things are getting more challenging. I think 60% is still pretty good, but I do miss the heydays of 2021. But I think from a long-term profitability perspective, the typically difficulty has risen when price rises as well, and price rise. So that decoupling has sort of negated in the last 4 to 5 months.
So how much are you making per month now then?
Today's price, probably around $100,000.
Oh, that's still great. I mean, as passive income.
Yeah, it's passive income. I've recouped all my investment back. It's just like any investment. It's about how much are you investing, how much are you earning, what is your acquisition price for an investment, and because it's very passive, and I'm dollar cost averaging. Doesn't matter if Bitcoin's at 30,000, it's at 50,000, 100,000. I'm making Bitcoin. Hopefully, it's at close to 100. And so, because my cost is fixed, and my profit margins will be higher when it does.
So I wonder, are you ever at a loss because of your expenses, or no? And what are you doing with your Bitcoin? Are you ever selling it? Are you holding it, using it for collateral for loans?
So at my current OPEX cost of energy prices, I'm mining Bitcoin around $12,000 to $13,000 per Bitcoin. So if Bitcoin is at 37,000 today, my profit margin is around 60 something percent. So if it goes down more, I would probably find it difficult. If I had older generation machines, so I do run the latest generation machines, and new generation machines are about energy efficiency, which means that your cost to mine Bitcoin is very cheap. But the older generation machines, you're mining Bitcoin at around $25,000, $30,000 per Bitcoin. And at that point, it might become kind of unprofitable. What I do with my Bitcoin is I'm also very deeply in DeFi. I earn yield on it. I potentially take loans against it. Potentially not this climate environment, take very low leverage. And I'm able to then compound and earn more from it.
Oh, wow. Yeah, you're just continuing to earn compound interest and staking rewards upon staking rewards, and that's really interesting. What about, how do the Bitcoin network upgrades work? Do you ever have a vote as a retail miner? Could you help make the network more decentralized as a retail miner?
I do think that decentralization or centralization of miners is a challenge. As somebody who actually runs a Bitcoin mining company on the side, I have close to 4,000 from 5,000 miners running with Touzi Capital, my company, and Marathon. And I know the guys at Marathon. I know the guys at Riot. I know all these at Core. Bitcoin mining is moving to industrial scale. Probably retail mining constitutes 1% to 2% of global hash rate. I think because you're not going to get the same kind of purchasing power parity, the low cost basis of CapEx, the low energy cost that you can get when you buy 10, 20, 100 megawatts. Right now it's a 1 gigawatt site. They're probably negotiating really great energy contracts. They're probably going to get cost to mine less than $10,000. Marathon is all about getting cost to mine very low costs. I don't think we can beat them. Industrial mining is here to stay. I think decentralized mining is potentially possible. And outside America, I have friends who are mining in Venezuela, and where you're essentially getting very cheap energy, and you're getting a currency that is kind of a great hedge against your local currency. And in fact, a lot of miners in Venezuela are actually getting these really old generation miners that wouldn't necessarily be energy efficient here. Someone like Riot or Marathon would not buy those really old miners, but they constitute a significant portion of the global hash rate, and they're being run in very cheap energy markets. And so I look for the countries outside America as sort of decentralizing it. And I'm thinking that when you're seeing miners running in places in Nigeria, Angola, Venezuela, El Salvador, and by local people, mom and pops that just have a couple $100 to buy one miner, not a couple $1,000 to buy the newest generation miners that produce a ton more Bitcoin. But because their energy is very cheap, they're potentially getting passive income for themselves. So I think that decentralization will happen as sort of these older generation machines, these new generation machines become old generation machines, and then they'll be resold to folks outside America, just like how new iPhones are resold to countries outside America.
It's interesting you think about the energy efficiency and looking at emerging economies to solve some of those problems. But I wonder what about your concerns about the environmental impact of Bitcoin mining, which is high on the minds of several folks out there who are very concerned with proof of work mining.
There's no doubt that Bitcoin is all about energy equals Bitcoin. But of all the energy that's produced, a third is lost to transmission. A third. So one of the things that is very novel and unique about Bitcoin mining is that you're essentially just needing power. And you don't need to be in population centers. You don't need to be where energy is being consumed. You need to be where energy is being produced. So if you can move your source of consumption of your Bitcoin mining to where the miners are essentially, or where energy is being produced, essentially next to a solar power plant, next to a wind farm, you can reduce your transmission costs. You can reduce those cost bases. So actually renewable energy is actually a very cheap form of energy when you get close to the source. And flared gas is the thing. You can essentially that's these oil wells that are flaring natural gas, and they're burning off energy, and we can capture that energy, wasted emitted energy that would typically just not be used at all. So a lot of Bitcoin mining is essentially using surplus energy, creating and it's trying to find energy sources that are as cheap as possible. Facebook data centers, Amazon warehouse data centers, they need to be online 100% of the time. Bitcoin mining, if you're not online, you're not making Bitcoin. That sucks. But you can be offline for 1% of the time. And in Texas, where there's storms on occasions and energy, if you can curtail your energy, meaning that you're essentially volunteering to shut down for less than 1% of the time, you can reduce your energy bill by close to 20 to 25%. So it's all about number and math in Bitcoin mining, and the economics of renewable energy is very profitable.
All right, Ang, super fascinating. We got to wrap it there. But folks, if you want to make money, do what Ang does. Follow him on Twitter. Thank you for joining us. That was Touzi Capital founder and CEO, Ang Taing. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.